Please like, comment and subscribe, and I hope you enjoy the video. Hey guys, it's James Brown from Brown Asset Management, and today I am doing a stock review of AT&T, ticker symbol T. I will be going through my 6 simple steps of stock analysis to decide if this is a stock that I should increase my position on or even sell, and then you guys can also take my findings and apply that to your own portfolios. AT&T is currently ranked 29th on the S&P 500, and that has been decreasing over the last recent years, where it was previously 9th in 2018. The stock price of AT&T is currently at $29.33, and this has decreased since highs of $40 at the start of the year, going down to lows of $26, and then been leveling off since then with the corona crash. The market cap for this company is $204 billion, and to get that you do the share price times by the number of shares outstanding. Now we're going to go through the 6 simple steps I use to decide whether or not I should buy a stock and whether it's a good stock for 2021. The first step I look at is PE ratio, and this is the price divided by the earnings, and this is calculated by taking the stock price and dividing it by the earnings per share. So the current PE of AT&T is 18.9. For the S&P 500, the history is around about 15. Probably looking for if a company's not too overvalued, between 20 and 30. Anything more than that, you'd have to take it to consider. So I would say this is a pass for the first step. The step I look at is increasing revenue over the last 5 years. Revenue is the income generated from normal business operations, so I'm going to look at the last 5 years and see if it's been increasing. So in 2015, it was 146 billion, and it's increased to 181 billion. It was 146 billion, and it's increased to 181 billion. So that would be a check mark in terms of increasing revenue for the last 5 years. The next step, which is the third step, would be to check that the profit is increasing over the last 5 years. So I will look at the gross profit, which is the profit the company makes after deducting the cost associated with making and selling its products or providing its services. So in 2015 it was $80 billion, and it has increased to $97 billion. So on a year-by-year change, that has gone up around 6%. So once again, that would be a pass, as it's gone from 80 to 97 billion. The fourth step I look at when evaluating a stock is the number of shares outstanding decreasing? You want this to be either decreasing or flat, because if the numbers of shares decrease, then your stake in the company is getting bigger. So the quick way to remember this is, say you have 1 share of a company and the company has 10 shares outstanding, you own 10% of that company. If they create 10 more shares, there are now 20 shares outstanding, you would now own 5%. So let's have a look at the shares outstanding for this company. So you can see the shares outstanding in 2015 was 6.14 billion and has increased to 7.25 billion. So that is a decrease. So if you were lucky enough to have 1 billion shares of AT&T and you bought them in 2014, you would have 15.6% of the company. Now in 2021, you would only have 13.7% of the company. So this would be a fail because these shares have increased. The fifth step would be to check that the current assets are greater than the current liabilities of the company. The current assets represent all the assets of a company that would be sold, consumed, or exhausted through standard business operations within 1 year. The current liabilities are a company's short-term financial obligations that are due within 1 year. So do they have enough assets to pay off their current liabilities? The current assets of AT&T are 54 billion, whereas the current liabilities are 69 billion. So this is a fail. It's not means that you shouldn't buy the stock entirely, but it is something you have to take an account in, and then when you're doing more research, to bear this in mind. The last step that I look at is the free cash flow of the company increasing? So the free cash flow is the cash flow from operating activities, take away the capital expenditure. Cash flow from operating activities indicates the amount of money the company brings in from its ongoing regular business activities, whereas the capital expenditures are funds used by the company. Now we're going to look at the company's free cash flow, and is this increasing? So the free cash flow is the cash flow from operating activities minus the capital expenditure. So let's have a look and see. Now we're going to work out that over the last 5 years, is the cash flow increasing? So 35.88 minus 19.22 is 16.6. 39.4 take away 21.52 is 17.83. 38.01 minus 20.65 is 17.63. 43.6 take away 20.7 is 22.84. And finally 48.67 minus 19.43 is 29.24. So the cash flow has increased from 16.66 to 29.24. That is almost 13 billion more free cash flow in the last 5 years. That is massive. If we do an average of the free cash flow over the last 5 years, this is 20.8. If we have the market cap as 209 billion and divide that by 20.8, the company is selling for 10 times free cash flow, which is very low. If you have a lot of faith in the company, this could be times 20, times 30, times even 50, we'll say. But this is at times 10. This is almost single digit free cash flow, which is a very good price. One of the last things I'm just going to quickly go through is the dividend here. Obviously, a lot of people are interested in AT&T's dividends. So the dividend has a current yield of 7.2%. The payout ratio is very high, but the dividend is safe because, as we saw before, the free cash flow is 29 billion and the dividend in total is about 14 billion. So the dividend is a very safe dividend. I don't think there's any worries of AT&T not paying this or cutting their dividend. AT&T has a dividend yield of 7.2%, which is about $2.04 per share. The ex-dividend date is January the 8th, 2021. So if you buy it now, you will be able to be eligible for the dividend based on how many shares you own. If you buy it on or after the ex-dividend date, you will not be able to be eligible for the payment. I do have a position in AT&T currently of about 20 shares, which I purchased for around $28.69. I will probably be looking to increase this in the near future if it drops, because as the previous price was around $40 and hopefully can get back to that, that's always the plan, is kind of a short-term play, then I would recommend buying this. As AT&T has passed 4 of the 6 checks that I do on stocks, I do think I'll be increasing this position in the future. Thank you for watching. Like, comment and subscribe, and see you later.